This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Starting the show is K-State grain economist Dan O'Brien with his weekly grain market update. He mentions pre-report expectations for the WASDE Report and what to think about as the markets move sideways. Antonina Broyaka, K-State associate in the Department of Agricultural Economics, continues the show by providing an update on Ukraine and the Black Sea region. She discusses what is currently being worked on and an outlook for the next marketing year. A weather update with K-State meteorologist Chip Redmond rounds out this week's shows. He explains what records have been broken this past week and why people should keep fire safety top of mind. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our grain market conversation a little bit differently than we usually do, talking about some pre-report estimates for that WASDE report that's coming out today.
Yes, here as we speak in about 45 minutes, the USDA will release at 11 a.m. Central Time. They'll release their December WASDE report on, again, Friday, December the 8th. And overall, not a lot of change expected in these balance sheets for corn, soybeans, grain, sorghum, and wheat. Again, for the December report, the USDA National Agricultural Statistical Service, or NASS, is not going out and surveying any farmers regarding the size of their crops. That final survey will happen for the January report. So I think it's on January the 10th, 12th, right in there, that there'll be the final crop production report, January WASDE report. There'll be a winter wheat and canola seedings report, grain stocks, all sorts of information that with a lot of potential to bring volatility to the market. So we come into this report today, and it's not intended or thought that it will have much of an impact with regard to what's happening on the U.S. domestic side. In fact, if anything comes about, it could be that we might see the USDA raise corn ethanol usage. That's been going pretty well. So that would have an effect on the balance sheet. Still, for the corn balance sheet, we're still sitting at an estimate coming out of November about 2.156 billion bushels of carryout. And really, that large carryout number provides a dominating narrative on the corn market. That's why we've been pretty much moving sideways for the last month or so. Again, just the market's not worried, at least at this time, about what would happen. Now, it will begin to worry more so, I think, in coming months as we look to the risk to the South American corn crops, but not so much the case at this time. So not a lot of change expected there. For soybeans, there's always a possibility that strong crush of soybeans for soybean meal usage, for soybean oil, renewable diesel could be raised. So that could have a positive impact on the soybean market. Ending stocks were in November projected to be 245 million bushels. So for the U.S. for the 2023-24 marketing year, chances that could move a little bit lower. We'll see what the USDA does. But again, not anything major expected. And really expectations of no change for wheat. We're already sitting at decades low projections of U.S. wheat exports. And if anything would happen, the USDA could lower that. I don't know that they'll do that yet. They'll probably want more evidence. But if they do, that would be a bearish move. Again, lowering usage for export usage, raising ending stocks on an already pretty bearish overall world and U.S. market situation. So not a lot there to look at. If anything does come about, you expect that the USDA could start bringing in some of the projected cutbacks that they've seen in South American production, particularly for Brazil, for soybeans, and that could come into play and lower world soybean ending stocks. There's a little bit of a projection about 1.5 million metric tons lower. So that's the built-in expectation that will start to reflect some crop damage down there. Also, some crop damage with too much rain in Argentina for corn. So that could start to come in. Again, expectations of about 2 million metric tons less and really almost no change, slightly higher for wheat. So I guess, Shelby, when you have a situation where there's not much that's really expected for change in a report like this, maybe you're as or more vulnerable. It'd be a wake-up call for the market that, hey, there's more risk out there than right now we're really pricing into these markets. So we'll see what those USDA reports come out and show, and then probably the key issues will be South America and any change that happens in the U.S. corn, soybeans, wheat, sorghum balance sheets. And if that comes about, then we'll just have to see where the market goes with it and figure out the direction next week.
And before the market goes anywhere, what is it looking like right now?
Yesterday's closes, before all this happened, we saw, again, a continuation of corn moving pretty much in a sideways pattern as it has been doing. See that we had dropped down to about 470 within last week and a half as a low for the March contract. We're now paying attention to March. December's still around, but it's in the delivery period. And so it had dropped to 470, closed at 488 yesterday on Thursday. And when markets are so trending sideways, I think, and waiting for new information, well, they start to look at technical indicators. But you do see in the last several days, as we come off those lows down to 470, that the relative strength index has gotten up to at least a neutral level. So that's perhaps an indicator of the market having sold off so much that now it's looking for more information. And also probably that with pretty good usage and some risks in South America, they're not inclined right yet to go lower. That doesn't answer any of the questions that Kansas farmers who are storing corn are wondering about is, will it be profitable to continue to hold? And I would say that we do have some pretty good carrying charges right now from Dece to March, about 6.5 cents a bushel a month. So that would cover commercial storage. As you go from March to May, about 5 3/4, also pretty positive number. Even May to July, 4 1/4. But that's in the market. So that's an indicator for farmers. But unless they actually take a position, try to capture that futures gain and then hope for basis to narrow up, they're still pretty much in a wait-and-see mode, somewhat as implicitly kind of a speculative, again, wait-and-see approach to that. So we'll see where that goes. And, on soybeans, same type of situation. Again, for soybeans, gosh, we've been volatile up and down in the last bit of time. Here of late, we've come down a little bit. The reason given, that being the January soybean futures contract, more rainfall or the thought of rain coming down in those dry areas of central northern Brazil is part of the issue. Decent, okay exports, not as much as had been coming on again as we have had in the last several weeks, but still enough to meet the pace that the USDA is looking for to the end of the marketing year. But if anything comes in as a surprise, it would be the strong soybean crush that could be reflected in that balance sheet, and that may help us out.
And so as we're thinking about all these, you keep mentioning kind of sideways for these markets. And so what maybe should producers be thinking about?
I should mention one thing when we talk about sideways market. Had been seeing for wheat a very much a down market, and we have had from a low of $6 up to about $6.67.5 an upward market, which basically gets us back to where we were in November. So we had really fallen off. So in a sense, in the longer term, it is sideways even for wheat. So here, as they're thinking about that, of course, if they're storing grain on farm, they have certain costs, cash costs of storage. You have to watch for shrink and keep it in condition and all of that. But if it's in commercial storage, it can be anywhere from 4 to 5 to 6 cents per bushel per month. And that's before interest costs. And so I think the financial management factor or issue that comes into play is if we could sell grain and take the money from it, cancel debt that we're paying interest on at whatever percent, then that would put us in the mode of needing to also consider interest rates. One thing that's working against storage being profitable this year is just that opportunity cost of interest of what we'd cancel on operating notes probably to put ourselves in a position of withholding sales. So we have opportunity interest costs that aren't small this year, and that's, if anything, putting farmers who've been looking for corn and wheat at pretty much sideways markets really anxious to sell into something that's good in terms of price-wise, and then again take that money and deal with operating notes that we have coming out of 2023.
And Dan, kind of as we get to the end now of 2023, how would you sum up the grain market?
If I were to sum up for this year, I would say that we had a sizable corn crop, a little more than we thought we'd have, about 15.2 billion bushels. And with that sizable supply in hand, it's put a lid on any worry and speculation on the part of the grain industry about getting supplies. So it's become, in the short run here, more of a buyer's market. They feel they can afford to wait, and because of that, we've seen the type of prices that where we're at. Again, futures below $5, 460s thereabouts, heading pretty much sideways for a bit, and really right now no threat that the market sees. I would say for grain sorghum, we've had pretty strong exports, so that's helped with cash prices anyway. So it's a positive. Sorghum has separated a little bit from corn because of what's happening with Chinese demand. For wheat, I personally think that the world situation is still very, very tight. For wheat, record tight since about 2007, 2008. But coming out of the Black Sea region, we have such aggressive sales coming out of Russia, coming out of Ukraine at low prices, low currency exchange rates, that the world has chosen not to be worried. And with that, I think personally that we're in an increasingly risky position in the wheat market, in that a drought, geopolitical disruption, anything that would happen to slow the grain coming out of that part of the world would be met with a lot of volatility in the wheat market. And it's just not now because the wheat's available, but we're sort of myopic with regard to the situation that we're walking into. And on the soybean side, when you're looking for an overall summary there, I guess I'd say that the size of the Brazilian wheat crop's less than it was. We still are looking at adequate supplies. Worries in that market have put us at about $13, $13.25 thereabouts. And a really worried market, a short crop market would be more like, in this situation, more like 14 and 15. So if anything stands to disrupt the markets, and then this low price narrative, it would be that we turn dry and don't come through in South America, particularly Brazil, with much corn or soybean crops as we're anticipating. And then if that happens, we get out to February, March, April, we'd have a different ballgame in the markets.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. I will link the WASDE report in today's show notes so you can find it there when it does come out. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead. We continue Agriculture Today with K-State Associate in the Department of Agricultural Economics, Antonina Broyaka. Antonina just recently did a webinar giving an update on Ukraine and the Black Sea region. She begins now by discussing some changes that are taking place to hopefully reduce the blockade.
One of the improvement is introduction of a so-called green corridor between Ukraine, Moldova, and Romania. So those three checkpoints, Reni in Ukraine, Gargaleste in Moldova, and Galatz in Romania, they're kind of located next to each other and strategic for goods moving by vehicles to ports, in particular to Romania and Galatz and Constanța. So actually, it's already agreed to have joint control between Ukraine and Moldova, but also it's need to be coordinated control, joint control between Moldova and Romania. And thanks to this decision, we will reduce the number of stops for trucks, and accordingly, we could speed up control. Currently, the Reni Gargaleste checkpoint allows us to have about 50 trucks to pass through this checkpoint per day, but the main goal is to increase the actual capacity to at least 5 times. Of course, we will need to do some reconstruction of the roads and increase the quantity of lines, and some technical equipment will be needed, but it will improve the process, and also it can be used for longer time. Particular attention was paid to improvement of the new Priva ports. 15 investment projects have been launched, including dredging, opening of new cargo transshipment points, increase of pilots number. As a result, it was possible to increase capacity of 3 ports up to 3.3 million tons of cargoes monthly. It became possible to accept 9,000 railway cars per month and over 4,000 trucks per day. Due to increased capacity of Reni port, it became possible to accommodate At the same time, 22 sea vessels and 40 barge, and to accept a vessel with a record dead weight over 28,000 tons. Totally in 2023, the new ports accepted over 12,000 vessels so far, 10,000 more than in 2021. The freight turnover increased for 627%. 45.5% of all loads processed in the new river ports during the wartime is grain, and 6.5% is vegetable oil. Unfortunately, October and November are not the highest indicators regarding the grain and in general all exports through the Danube River, and that was due to seasonal issues because navigation was closed since October 10 due to decrease of the water level in the Danube River. So then vessels were forced later to load at a lower draft, which affected the volume of transshipment. And compared to the normal conditions, barges with grain were loaded at a draft of no more than 2.1 meters instead of usual 2.5, 2.7. But now the situation stabilized. We had heavy rains and a lot of snow, which melted, so the level of water returned to the normal, and now the new ports are operating as usual. But at the same time, with the beginning of work of the Ukrainian humanitarian corridor from the ports of Great Odessa, interest actually to the new ports fell about 20% because there is no so deep navigation as it is in a Great Odessa ports.
She now says where Ukraine has been exporting.
In 10 months of 2023, agricultural export to Europe is already amounted 59%. Agricultural export to Asia increased from 10% to 12% so far, but to South Asia decreased. Now it's around 4%, and to Middle East also now it's 15 instead of 17.
Antonia now talks about Ukraine and the state of its agriculture.
Ukraine is still self-sufficient in terms of production. It is still enough to export and feed other countries. The main concern is food affordability due to decline in real purchasing power as a result of prices rise. In general, food became at least 35% more expensive since the beginning of the war. Milk, it is like 23.5%, bread 28%, meat is 39%, almost 40%, fish 50% more expensive, and especially we can observe enormous deviation in prices for fruits and veggies that traditionally been produced in the south of Ukraine, and also for eggs. By the end of 2022, the inflation rate for eggs was 76% because we lost significant amount of poultry. Many animals, actually not only chicken, were killed from missile attacks and just died due to lack of food and water, and nobody could care of them. And another problem is logistics to the region, which are close to the front line. As a result, according to the Global Food Security Index in 2022, Ukraine declined from the rank 58 to 71. And it's even below those countries that Ukraine traditionally export food to, like South Africa, Indonesia, Philippines, Algeria, India. So that creates another concern for Ukrainians.
Lastly, she explains the expectations for this marketing year.
Everyone knows that Ukraine has very, very rich soil, and this harvest is very good compared to previous year, and especially considering war condition, right? But I just wanted to mention that almost all types of fertilizers for all crops were almost like third of the norm from the 2020, 21, 22, 23, and it's lower and lower. And we need to understand if even with such rich soil, we will continue to apply less fertilizer, we will not have good results in the future and this will accumulate lower harvest from year to year. So by the end of November, 95% of harvest in Ukraine have been completed, and we already have more than 55 million tons of grain and legumes, as well as 20 million tons of oilseeds were trashed. Due to liberation of some territories, we were able to harvest even more than expected of wheat, barley, and peas. 7 million hectares of wheat were harvested with a yield of 4.8 tons per hectare, and we have 22.5 million tons of wheat now. 3.4 million hectares of corn were harvested with a yield of 7.6 tons per hectare, and we already harvested 26 million tons, and 1.5 million hectares of barley were harvested, and the average yield was 3.9, and we trashed almost 6 million tons. So as you can see, average yields per hectare for corn, soybeans, rapeseed, and sunflower are lower than in pre-war 2021, but almost for all crops higher as in previous year. But as I mentioned, that is only due to favorable weather conditions, nothing related to inputs and following the vegetation calendar, etc. So the focus for this year, harvest and export, has been again increased by both Ukrainian side and the USDA. Ukraine is expecting in general to have 81.6 million tons of grain and oilseed. Harvesting of corn is still in progress. We hope to receive around 29 million tons of corn, and we also expect to increase some sunflower seeds harvest. Just a slight change in export forecast. In this case, USDA is less optimistic, expressing higher concern regarding export logistics. The forecast for corn increased by 1 million up to 23 million tons by Ukrainian side, but just only by for 500,000 by USDA to 20 million. Ukraine didn't change forecast for wheat export. USDA added another million up to 12 million tons. The export for other crops didn't change much. And the only thing I would like to mention that we expect to have much lower export of sunflower seeds because we believe we will be able to crush more and export sunflower oil rather than sunflower seeds. So totally our export potential is now around 50 million tons, but this is 8 million tons less than in previous marketing year.
That was K-State Associate in the Department of Agricultural Economics, Antonina Broyaka. You can hear her full webinar on AgManager.info, and I will also link it in today's show notes on agtoday.net. We're cutting to a short break now, but we'll be back with more ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update. And as always, we're joined by K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, first just talking about drought monitor changes we've seen.
Yeah, we had this snowfall from last week, or I guess 2 weeks now, was finally reflected as it melted. And we ended up with a one-category change for a lot of south central and portions of eastern Kansas, where the corridor heaviest snow fell, where the 10-plus inches fell. They had 1 inch or more equivalent moisture in that. And for this time of year, we average anywhere from 0.6 of an inch in the southeast to 1/10 of an inch in the west. And so that corridor saw about double, triple their average precipitation for the week. So that resulted in one category change. We dropped the areas that are in D1 drought or worse by about 4% across the state this week, which is a pretty substantial improvement. We did see some degradation, though, still in the southwest, especially along the Oklahoma border. Southwest, some of those areas have gone 40 to 50 days without a quarter inch of rain or moisture. And so drought is slowly starting to weasel back in as the surface dries out.
And in this past week, did we also have some chillier weather?
Yeah, this weekend was definitely had a cool but moist edge to it. It was kind of odd. We didn't get precipitation per se, but we had drizzle and rime ice for a lot of folks, so just foggy skies. And then as a result, we were much cooler than normal. We had a high, I think it was on Sunday, in the Manhattan area of 32 degrees. So that's much below normal. Average temperatures in central Kansas are below 40s to around 40 degrees. So that's about 10 degrees below normal. And we've obviously changed since then. We have an interesting jet stream that's keeping the most of really cold polar Arctic air trapped to our north, with a weak polar vortex right now in the jet stream up there. And then we have the El Nino enhanced jet stream still exists, but it's down in Mexico and along the Gulf. And we have the primary subtropical jet stream across the central U.S., but doesn't have access to moisture or the cold air. So it's bringing temperature fluctuations, but not significant, but keeping an active weather pattern that unfortunately doesn't have access to that moisture. So we're getting dry, cold frontal passages, and that was one that just had enough moisture for fog this weekend. But then we dried out since then, and then the temperatures rebounded a couple days after the front moved through, and now we're set ourselves up for the next cold front.
And do these temperature changes cause something?
Well, we've obviously got pressure changes along with that, and these temperature gradients combined with the pressure is yielding some breezy winds. We haven't had a lot of wind across Kansas, especially in the last month. And in the last week, we had a wind event on Sunday. We saw some gusts over 50 miles an hour in western Kansas that unfortunately caused some blowing dust. I think we're going to see more of that to come. It looks like Saturday is going to be one of the days where we're going to see some pretty substantial gusts across the state. Probably not quite to the 50, but sustained winds in the 25, 30 range. That's pretty windy, and it's going to be a cooler air mass over the weekend, but it's going to be a drier air mass. And with northwest winds, that's going to increase some fire danger concerns as well. So it's a good time to check any of your past pile burning. I know a lot of folks did that with the snow cover, and they can still hold heat, and we're going to have enough wind to blow embers out, and the grasses can dry out really quick. They're in a 1 hour grass or 1 hour fuel, so they can carry fire efficiently despite even the recent moisture. So we're going to see some fire concerns with those winds and drier conditions.
So, Chip, as we look forward, what can people be expecting?
Yeah, so this weekend will be dry, windy, and cooler. We're going to start warming right back up next week. And honestly, the next week plus looks above normal temperatures by as much as 10 degrees. Not record-setting by any means. Like we saw some 70s, actually a lot of 70s on both Wednesday and Thursday. That broke some records in the easy record categories that don't have a big, long history. But overall dry conditions, we need this jet stream or the three jet streams to consolidate a little bit and bring in a more amplified, potent storm system. And right now, I just don't see that. Pretty much the precipitation is going to skirt all around the state of Kansas without actually making it here.
And maybe around Christmas have a change?
Yeah, we'll watch. The weak polar vortex is expected to re-weaken again. This most recent polar vortex impacted Russia and Eastern Europe, where they saw like negative 57 degrees. We got lucky and kind of missed this one, but it looks like the next potential for that is going to be the end of the month into early January. That might be a really good timely change for colder weather and maybe some snow for the Christmas time period.
That was K-State meteorologist Chip Redmond. That's all we have for you this Friday on Agriculture Today, but we'll be back with more for you on Monday.